What is up, chat? How's it going, everybody? Kurt is here. What's up, Kurt? Good to see you, sir. Maybe let everybody know on Twitter that we're going live. Can I get a link? It's my little linky thing here. No, they'll figure it out. No, wait, let me do this. Always good to let everybody know. Oh, this looks cool on my channel. There we go. Trap blog. What is cooking, chat? Chads, are we cooked? Chat chads. Damn, Brad, we definitely read. Sharon's here. Good morning, Sharon. What do I think of the squeezed meme GameStop just posted? That's a great question. It looks like it's Mr. Resetti, isn't it? Isn't it Mr. Resetti from Animal Crossing? Isn't he originally from Animal Crossing? You guys know who I'm talking about? Isn't this Mr. Resetti? Absolutely, it's Mr. Resetti. Yeah, let me share this. Yeah, so here's our Mr. Resetti meme, but really, really tight. Let me bring up a photo of this guy. You guys ever play Animal Crossing? Animal Crossing is pretty cool. Yeah. Oh, he may not be originally from Animal Crossing. Yeah. So this guy. So if we start off with a little tinfoil. Yeah, his first appearance was in the N64 game Dobutsu no Mori, released in Europe and North America on the GameCube as Animal. Oh yeah, okay. Oh, I didn't realize there was an N64 version of it. Dobutsu no Mori. That's very cool. It sounds like a really cool samurai thing, but then it just means maybe Animal Crossing. Yeah, I remember. So like Animal Crossing was really cool because it had like all of this like meta stuff to do with like turning off your console without saving or like doing stuff like that. And so the game would have ways of letting you know. I remember he was an unlockable trophy. I was introduced to him when I was playing Super Smash Brothers Melee. He was an unlockable trophy in Super Smash Brothers Melee, but I don't know that Animal Crossing had been released yet. But he was an unlockable trophy, and then when it came out on the GameCube, which was the version I played, which was very fun, and I think also the inspiration for Stardew Valley, by the way, which is also very fun. Definitely have gotten addicted to Stardew Valley in the past. But very cool. But yeah, so I don't know. Is this pointing to a reset of something? Apparently, he has a brother named Don Resetti. Is he related to the mafia? Oh, he comes back on the Switch version. Yeah, there he is. Super Smash Brothers Melee, Brawl, Super Smash Brothers for the Wii U. He was in Mario Kart 8. Also, Monster Hunter 4 Ultimate. So I don't know. I don't know what's going on there. That's a little, a little GameStop tin is always fun. We love a little bit of tin to keep things fresh. Always good to kind of keep an eye on that stuff. I think, what we will do today is we will continue to take a look at our, check in on how this kind of multi-phase sort of thesis or hypothesis, I should say, forecast that I put down a couple weeks ago is looking, sort of look over this week's events. And I would say so far so good. I mean, did have this interesting hiccup with figuring out something I missed in terms of figuring out, okay, they're doing gap versus non-gap. Bitcoin and asset impairments don't count for for non-gap earnings. But even still, I thought it was peculiar that we still essentially got the move across the price ranges that I thought we did. It was just squeezed into about 5 minutes, which kind of makes me, actually, it kind of looks like the Mr. Resetti meme here. So it's like, because GameStop actually beat the earnings expectation, according to the non-gap figure, it's like the move that they had planned, they squeezed in to make it look like this. That's what that reminds me of the most. So what do I mean by this? Let's take a look over at our chart here, and we'd have to view this on like 4 hour. So too far back. After this, probably this. We need to go a little closer. So right here. So let's squoosh this. We need to go closer. Honestly, it's probably better. Can we see it if we do the 1 min? I'm just going to scroll back a lot here. So Wednesday, right here. Okay. Yeah. So you guys will recall, right? Basically what I thought was going to be the case, and the price ranges that I sort of laid out there, that I thought we were going to get in the event of a double miss. I was fairly confident that we were going to get something like a double miss. Obviously, I had the gap figure, not the non-gap figure in my mind. But the idea was, okay, well, probably what they're going to do is we're going to get the miss. They're going to walk us down, right? They'll do a little shenanigans with the report, but we'll come down. We'll open low. As soon as we open, we'll sort of move back up, and we'll crank back up. And kind of the top end of that range is 2350, right? I thought maybe a little bit before into the between at least 2350 up to 2450 maybe is a pre-earnings thing. But then I thought, okay, 2350, and then we come back down, right? And then into April OPEX, then we go down. Maybe only into the 22s if we really, really went down there pretty steeply on this side of things. And I was actually, what I did going into earnings, so I think I mentioned to you guys during earnings live stream, I think I said this also when we were doing the live stream on Tuesday. Obviously, so I opened covered calls. So I opened $20 covered calls out for April OPEX on my positions. And I also put in, because that resulted in me actually having a pretty big cash pile as a result of opening all those covered calls on the side, to then go ahead and open new share positions. So I put in orders that were, they were within a few cents of basically that low that we saw on Monday. So I think I put in stuff for like 2019 and then 2119, and then some that was one sort of rung down at 2066, just in case, something like that. And we came to within 10% of that, right? So we came to 2138, and then immediately popped back up. And you'll notice, right, that the first thing that they reported, and we were looking at this live, right? This is what I saw live. What I was confused was the first thing that they released was not the non-GAAP figure. That's why I was so confused. Like, wait, what's going on here? Dow Newswire published, they were the first ones to publish anything that came across kind of the collective feed there. And what they broadcast was the 22-cent figure. So it was the GAAP earnings, which made sense to me. I was like, there it is, 22 cents. Makes complete sense. Region Formal's right on the money. This is what we thought. Okay, here we go. And look at us dump 21.38. Okay, well, maybe it'll come back a little bit lower. All right, like what's good? But then all of a sudden, GameStop beats 49 cents. It's like, wait, what's going on here? So what that looked like to me was somebody or whoever is connected to Dow Newswire or whatever somehow push that number out there, push that gap figure out there first. Algorithms reacted, dumped the price, which is how low they would have dumped the price anyway if there were a miss, if the thing didn't live up to expectations. But then because it was actually a non-GAAP beat, not factoring in Bitcoin, then they immediately released the next figure. So in a span of just a few minutes, and you can see this here on the chart, right? Let me make this a little bit bigger for you guys. Immediately, they shot us right back up. And this is a period of, this is 2 minutes. This move was 2 minutes. And then in the next 5 minutes, we're back up to 23.25. And then we top out pretty close there, 23.40. And that's kind of our high midday as well, right? Yeah. Maybe a little bit later, it got a little higher here. Right, 23.50. So we got these numbers, but it's like they sort of preloaded in these ranges or this range, and then strategically released certain information so that, let's say, pricing algorithms would go ahead and move us accordingly. And so when I look at that, when I look at, in the span of just a few minutes, this thing, right? So this thing, which I thought, would be, this will take all night, and then we'll open up, and then we open up, we'll go up, right? So we'll open up, and I sketched this out, right? We'll open up down here at like 21.50, and then we'll move up. And so we'll recover, and maybe we'll come into the 22s again, and then we'll go back down. It just got all squished into this right there. So, I mean, that kind of looks like that to me. Not saying that's definitely how to interpret the Mr. Resetti meme, but very interesting. Let's see. It was definitely weird. Enjoy that coffee there, Duppet 2. What's up, Mr. Theta Bucks? Good to see you. Hey there, Rob. We are cooking today, Chad. That's right. Yeah, I'm falling a little bit behind with the chat. Yeah, I mean, he could have to do with our cycle, something like that. Squeeze, reset. Definitely makes for some fun speculation. Lots of plausible deniability. I mean, I still think, I think really my kind of reflection on the swaps for 318 is that, yeah, there was an event that was in place there that does track, if you're using 53-week theory, right? And just to clear this up, right? And this is, some folks asked me about this earlier in the week. Just to be clear on sort of what the theory in place here is with respect to these swaps, right? I'm not necessarily arguing that when we see swaps show up in our data, say like in Metro Balance data, or something that we can just pull from the, from general records, that those swaps that we see are the positions that then are causing these really huge fluctuations in price action. Rather, the way I suppose that I see these, and some other folks that I've been talking to have taken a look at these, is that really the swaps are kind of like options. So just as we as retail traders, individual traders, right, we look at the options market and we try to take advantage of derivatives in that sense. Options are derivatives, just like swaps are derivatives. They work on a different order of magnitude, but they also work in that capacity, right? And we have our sort of smaller portfolios, our personal savings, things like this, and then we, trade options on top of this with these portfolios as leverage. So do larger institutions, obviously hedge funds, the like, maybe private equity or something like that, then can go ahead and trade on top of that. They can take advantage of the options market, as we see GameStop takes advantage of the options market, but they can also take advantage of swaps. And so the swap is like a more leveraged derivative that can be opened. It can be opened with custom counterparties, things like that. There is a whole market available to institutional investors who can open up derivatives positions on their holdings as a whole, of course, but at many orders of magnitude larger than what, say, you and I would trade with just on the open market. However, right, just as we try to look at, hey, what's going on with the big boys, and then try to open derivatives positions in relation to those, so then do institutions look at, say, positions that are much larger than theirs, which are maybe disguised, right? Those are not necessarily things that are coming through in the swap data. So things maybe like the infinity swaps that guys like Always Sad But Truthful publish about. So things like the 1901 swaps, or the theory of the daisy chain swap going back to, say, the GameStop IPO in 01 that got daisy chained into GameStop swaps in 08 that got daisy chained into maybe Archegos and then Credit Suisse and then UBS, right? And so the idea that there are these swap positions that are essentially losers, that there are bags that have been internalized, bundled, rebundled, triple bundled, right? This kind of idea of what happened with mortgage-backed securities in the events of the Big Short, that something like that also has happened with failed GameStop positions, and they're hiding in the background somewhere. And it's really these positions that need to be accommodated. They're the ones that move the market. We can't see them necessarily, but that doesn't mean they're not there, and it doesn't mean they don't represent this kind of, right? You can see all this stuff that happens around them, so you can imply that they are there based on everything that happens around them, right? It's sort of like I don't know, black holes. Like, you can't necessarily see black holes, but you can see their effects in space, something like that. Like, you can see the distortions in gravity around black holes, and so you can imply where they are based on those distortions in gravity. Something like that works with these, at least in theory, with these infinity swaps. And because we would say, right, okay, well, institutions who can open visible swap positions, maybe there are institutions out there who actually know about this, right? They understand how these mechanics work. They're closely guarded secrets. They may have insider information that we're not privy to. They can see this stuff, okay? So the idea is, if they're opening swap positions that expire, let's say, around these key dates, maybe they know something about these legacy positions or infinity swap positions or something like that we are not privy to. They have insight, they have insider knowledge, we don't, and they trade on that. Well, then we can say, well, okay, let's assume, right, they're smart money. They're smart money for a reason, but they're called smart money because they know they have access to privileged information that we do not. So if we see what they're doing, we can say, okay, these guys seem to think this expiry date is a good expiry date to have their swaps expire. Why would they think that? They must know something about this date, right? Not arbitrary. They must know something about these dates, because you can customize the expiry on these things. They must know something about these dates in order to choose to open swaps that expire on these particular days. So the theory, at least insofar as how we can use visible swap positions as a guide, is that they're likely being opened on the basis of insider knowledge connected to those particular expiries. That's the idea there. So sure enough, it doesn't always work. That's why it's not like automatically, if there's a swap date, if we see notional exposure, it's definitely going to work out. Sometimes it doesn't. But if we can find, say, this kind of works with our 53-week theory, This works with, maybe trying to do other types of proxies like Richard Starr theory or things like that. And we see notional show up, and we see something like we know, earnings is going to go a certain way, or we have that kind of suspicion based on even just things like recognizing price action at aspect, that we can use that as something of a proxy in order to plan trades ourselves, something like that. So I would say, based on what I've seen so far, it does look like they are going to walk us down into April OPEX. Now, we may kind of kick back here for a week, and this is something I do want to take some time to take a look at, and that is we have to check in with our FTDs. I think this coming week, we may have a little bit of volatility, may not bring us up too much higher than, say, 23, but we may have a little bit of volatility that gives us a little bit of a recovery here as a result of clearing out some FTDs from specifically, I believe, from XRT. But we'll take a look at that in a second. I want to check in and make sure we're caught up with chat here. What was this one? Let me see GameStop. Tinfoil. Recent beat the price change. The time is now. Price up. Yeah. Wait, what? Within the series, Mr. Resetti is treated as the mascot of the seasonal holiday Groundhog Day. That makes sense. That's funny. What's up, Shibo? Active Rehab Mobility, hello. There's rumbling we might be buying Best Buy or Target. So my immediate thought is that I would doubt GameStop would be looking to expand into a parallel retail market. As far as I know, Best Buy doesn't do a whole lot different from except maybe do like TVs and stuff too, than what GameStop does right now. My thought, my inclination, which is of course influenced by some of the things that Michael Burry was saying, GameStop is likely going to make some moves that will confuse almost everybody on the surface. My guess is that Ryan Cohen is going to target companies that will allow him to go ahead and pull more financial wizardry type stuff. So something that was proposed by Michael Burry was to target companies that have a lot of NOLs, so net operating losses. So the thing that interesting about a business, right? We can't do this as traders. I mean, we sort of can, but not in an advantageous way. As a business, if you have operating losses, your core business, say, loses money. For example, GameStop, the core business over the past several years has, from 2020 to 2020, not three. So I guess 2019 to 2022 had net operating losses. In total, I think getting close to like 3 billion. So as a major business, if you have net operating losses, you can bank those, and you can exempt up to 80% of your taxable income in any given year from tax using banked net operating losses. So that's very useful, right? So it means that if you take a look, right, if you go back and take a look at GameStop's balance sheet, you'll notice that they pay remarkably low taxes. I think their effective tax rate right now is like 9% on their income. Why? Because they have all of these banked net operating losses. Those will go away. They're on pace to go away in maybe 2, possibly 3 years. So there may be a way to strategize to find businesses that have high net operating losses that are otherwise not very expensive to acquire, but which by acquiring they may offer some synergy. Ryan Cohen may be able to sort of make the business more efficient, find a way to integrate it into GameStop's existing model, and that may not be hugely profitable in terms of adding, say, gross profit to the balance sheet, but it can end up transforming for a number of additional years GameStop's earnings, especially during the console cycle, by taking advantage of other companies' banked net operating losses. So if you purchase a company, right, you can then take their net operating losses, and then, let's say there's a merger, whatever, you retain those. Those are treated, those are like an asset. And then you can apply those net operating losses then to the new merged company as a whole. There are special rules and special exemptions to it as far as I understand, but I wouldn't be surprised if Ryan Cohen was trying to do something like that. And that is something, for example, that that Michael Burry was talking about in his GameStop stuff. So that seems reasonable to me. Don't know about the particular companies that Burry called out, but I would think acquiring, a couple potentially good synergizable companies that have some good net operating losses on the books, I think would work out very well. I think that would benefit GameStop, especially as they go into the console cycle. First year here of the console cycle, right? Earnings revenue is gonna grow, or maybe not revenue, but gross profit based on console sales, collectible sales. I think over the next couple of years are going to grow, and those NOLs would be a good asset into keeping corporate tax rate low, the effective tax on our income low, right? Obsessively gaming. Doesn't matter to me. I'm betting on RC, so whatever the plan is, I'm in. Nice, dude. I keep asking, says Kurt, paid subscription, ChatGPT, if GameStop can hit $60 a share within 365 days, it only has negative things to say and says very unlikely. I'd say garbage in, garbage out with the program. Yeah, man. I don't really use ChatGPT very much. I just stick with Grok, right? I mean, I already have the one subscription for Twitter, so Grok pretty much does what I'm looking for anyway. And there are a couple other platforms that I use that I kind of use in tandem with it. Some of it may rely on, like I use Anara as a library management software, and that may do some things in terms of, I think sometimes it can tap into ChatGPT, but I don't pay for it directly. So wouldn't be surprised, and that's part of the issue, I guess. Yeah, interesting. What's up, Tomer? Another great analysis. Prediction, really trying to start making more income from it, but I always find myself getting out early. Yeah, I mean, I did that a lot. I did that a lot too. What I would say that it took me a while to sort of stick in my trades and things like that. I mean, you're never going to get it perfect, right? If you do, great, like you got lucky. But understand that with your trades, they're not going to be perfect. You're not going to time them perfectly. The idea is to capture value, and when you've captured value, which is of a quantity that you are satisfied with, to actualize on that, right? To sort of lock that in, and then be happy with what you've declared to the world that you would accept, something like that. But what I would say is thinking about sort of positioning for capturing value over a range of time is sort of what I try to optimize for now, and sort of say, okay, here are all the possible outcomes I could see, depending on, based on the instrument that I've, chosen in order to try to capture value from this particular price action phase. Here are all the possible outcomes. I accept all of those outcomes as such. And I will not no matter what I do, I will not take a course of action that will result in some other outcome at the risk of some sort of form of loss or walking away with nothing. And so what that puts me, the situation that puts me into is I say, okay, I've delineated possible outcomes. I'm open to whatever these outcomes are. I accept whatever they are, and whatever comes next, I will react to it. I'll formulate a new plan. I was capable of putting together previous plans. I was capable of putting together this plan. No matter what happens, I will figure out what to do next. I'll figure that out. It's gonna be okay. That the idea is to be able to have the ability to think generatively about how to capture value from these different situations. And one thing that I sort of try to remind myself of is like, yeah, look, before any of this worked out, I didn't know how it worked, but I figured it out and figured out how to do this type of trading. If some crazy unexpected things happens on GameStop, I'm at least going to walk away with some delineated amount of value that I specified was acceptable for me when I made this trade. I will figure out what to do in the face of whatever comes next as a result. So I think that this position is really what gave me, I think, the most, I mean, not only confidence, but like, I think also helped make me even more profitable of a trader, consistent of a trader, and help me avoid doing boneheaded stuff. Like doing stuff where I go, getting tricked by some illusory, like being tricked, I would say, by the illusion of action. Something's happening, therefore I have to do something. No. Right. You plan, you set up, you set the field as you would for a specific delineated length of time, and then you commit to that. And I mean, yes, there are situations, where you can react or whatever, things catch you by surprise. Like it happens. It doesn't mean don't ever do anything. That's not what I'm saying. But a lot of the way that price action ends up looking is it looks that way specifically to exploit human psychology and instill a sort of, not instill the illusion of action, but impart the illusion of action to get people to make bad decisions, right? That's why it looks the way it does. So that's what I think about that. Hopefully that's helpful. More 10. RC vote on RK's birthday. Interesting. Inviting Kitty to return so their stock price goes up and they can execute instant Berkshire. Maybe. I mean, I don't know, right? I mean, if we bounce back, we take a look at our our model here. Very basic model. Hey, what's up, brother? Yeah, okay. So, yeah, all right. So we got this. This happened over here. We did get the little kick up. Earnings, which is not here, but here, right? We started moving back down. So we're already starting to move back down with the idea of kind of, we might move a little lower than that. I think there is a chance that we move down towards 20, but, this whole little down phase there. Followed by what I would say will be the culmination of our Rainbow Road stuff is going to be prior to the 29th of May. Now, I did think about this a little bit with some folks, not too much. But I mean, we do look very similar to our situation. Our situation right now looks very similar to 2024. This is something that is starting to stand out, right? We talked about this past couple weeks as well. And if we bounce back to 2024, right, so right here, local high, early March, down, 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 down. Low on the Friday before earnings, come back. The Monday before earnings, we get a nice big up day, right, which is what we got. We got actually the true low was in pre-market, and then we recovered by about $2 full, actually, just like we did here. Of course, I did not necessarily anticipate that we would have that extra dollar down during pre-market, but that's the way it goes. Now they like to, well, I guess even overnight trading. It wasn't even pre-market; it was overnight trading. So that's another layer at this point, right there. No overnight trading back here, but that's something that makes up a little bit more difficult. They do send the deep lows during overnight trading or early pre-market when you cannot capture the value with options, unfortunately. A lot of the time they do that. So we did get that. Earnings says it was a miss. 2 surprise misses, but it was profitable on the year. So nonetheless, trade down. I thought we were going to get something like that. We didn't. We kind of just opened flat. But then, yeah, we started to move down anyway. And where were we that Friday? By that Friday. Oh, wow. I guess Easter. Yeah, Easter was the 29th that year. Very interesting. So that Thursday low, and then Monday we opened low. Easter Monday was low, and then flat maybe for a couple weeks there in April. Another little down move into the week of OPEX. And then, yeah, bottomed on OPEX, which was Friday right here. The Monday, actually, no, the Monday after OPEX. Flat day on Tuesday, and then cowabunga. So if we bump forward here, you can see we are starting to see a little bit, right? So local high, early March, same thing, move down, low right here on Friday from the daily perspective, a little bit of up, but flat, and now we start to move down a little bit. Don't know if we'll go down as deep, but if we do see something that really pushes us down pretty deeply, maybe that'll be something of a signal. It's a little difficult to say at this point. But right now, focused on April OPEX, I would say personally. Yeah, if you send me, it's not publicly available, so if you send me a message on X, I'll try to find a way to get it to you. And go blue, switch to Claude versus ChatGPT, and maybe. What's the best way I've found to identify the visible swap positions? Well, I am very fortunate because I have some folks I know some folks who are good at that, whereas I'm not necessarily very good at that. One way was that I used data that somebody put into a CSV previously, so the aforementioned data by Metroballin, and then there are some folks that I talk to now who process who do quite a lot of work to process swap data, and so I'm very fortunate that there is a community of people out there that I talk to about this stuff, and some of them go ahead and spend quite a lot of time processing that swap data. So I'm fortunate enough to be able to just go ahead and take a look at what they're willing to share. So, I know Always Sad But Truthful is very public about sharing swap data through his Gamecock application. So that's one place. That's one place you might look. Some other people I talk to, I'm not sure they want to be public, so I will keep their names anonymous for now. And Glow Blue, I would think they need some sexy info coming out in May. That is the company to make sure all on board for the vote and some excitement and positivity and repricing by late summer to make warrant exercises before October. Yeah, I mean, I think now would be the chance to do it. So if Ryan Cohen, I wouldn't be surprised if Ryan Cohen really wanted to make a go to get those warrants exercised. I think he would have to do it essentially now, unless he had something planned for like September and he could try to make a go of it there. But Rainbow Road is typically the best time to do it, especially because these swap positions are big. Coming up here, April OPEX. So there will likely be quite a few FTDs that are incurred as a result of making that accommodating, let's say, whatever those positions happen to be. So if we take a look, actually, I did want to, right, I mentioned taking a look at FTDs. So anything new? No, we won't have anything new. Yeah, when's the next release? So we got, not for a bit, right? So this is yeah, we got this 16. So another couple days we'll have first half of March. We should have first half of March data. So that'll give us some insights about what to expect in the later part of April, I suppose. We do have a little bit of the way of FTDs here. Not a lot. I mean, these are interesting, but these aren't like a huge amount. The real pile I think that was interesting was XRT. Let me make this bigger. Yeah. Pretty sizable pile here on the 10th of February, which I think takes us to 18, and then 7 days is 25, 4, so 7, 14, 21, 28, 35, and then T plus 1, 2, 3, 4. Yeah. So for these on the 10th here, these 290, let me make this a little bigger for you guys here. How's that looking? Can you see those? Should be able to see these on the 10th. So right here. So these guys are the end of their Bruneau formula window. Will be Monday and Tuesday of this week. So if these matter, we should see, if they haven't been cleared yet, maybe they have, it's hard to say. Don't know. They may have moved us down to 22 this early because they expect to have to clear these, which would mean Monday and Tuesday, maybe we get a little volatility. Our evidence for whether we would see that is if we go ahead and see a VWAP, right? So VWAP orders look like, diagonal lines up and to the right, and they kind of just hang out right on top of the 20-minute moving average. So if you want to try to detect one, just go ahead and set your chart for that. How long they go, hard to say, but I would say the majority of them kind of begin within about 15 to 20 minutes of open, and then they culminate between 11 and 11:30 usually is when most of them do most of their chugging. We do have some then toward the end of the month too. So there's a couple of very interesting piles here. These here, no, I will also mention that XRT I think is still on the ratio threshold securities list. So they have tighter deadlines for more recently incurred FTDs, supposedly. These FTDs from 23, 24, 25 would be T plus, T plus 1, 2, 3, 4, 5, 6. And 7 is 10, 14, 21, 28, 35. So those would show up 8, 9, 10, 13, 14, 15. So then, yeah, I think they'll want to get those. These FTDs, I could imagine, they would want to get cleared maybe in a little bit of early April. So this stuff might come in. This might keep us a bit more buoyant kind of earlier on, maybe introduce a little bit more volatility. But I mean, I'm talking running this kind of 22 to 23 range maybe multiple times. And I would imagine they would want those cleared sooner rather than later. I mean, also within their timelines, but sooner rather than later. And then by midweek of OPEX, I think maybe we see something like what we saw going into the end of last week, where about midweek, once the FTDs are cleared, then we start to fall down. We fall into OPEX, and then we actually fall into that Monday, which is where it looks like we have that notional concentrated in terms of stuff that I can see. So about 75 million in notional is set to expire there that Monday to time up with OPEX, and likely maybe something else in the background, possibly an infinity swap. And I would say that also is going to, well, all of that is going to be very well accommodated by 53-week theory here. So yeah, so you can see, right? This coming week, we have, this coming week looks like a low, right? Looks like even lower for a close down in the 21s. That's actually where that 2150 number came up for me. But then after that, we do have a little bit more room, but I wouldn't be surprised if they really hold us down into Monday, April 20th right here. And then after that, then we're kind of free to move. But I don't know if we really, I'm not saying we're just instantly going to run up. I think maybe there's a little bit more time. But then, yeah, there's got to be a little something. There's got to be something, I think, to get us up to, say, like 32 to exercise those warrants. I think if nothing happens, we kind of max out at like 25, 26 again, which is, I think, the most likely scenario. But if there's a surprise, if there's some reason to think some other juice to add to the smoothie, as it were, then I don't see why we couldn't go higher. Bonnet stuff. That's my trading style. Yeah, me too, dude. For a lot of years. Guido says, seeing as how GameStop's profitability has been tied to game console cycles, would be good to acquire a company with complementary cycles to fill in the gaps. That's very interesting. That's a good thought. We have a few years to do it, but yeah, by 2028, I think console cycle should come to a close. So it'd be good to have something step up. So 29, 30, 31, 32, that stuff looks a bit better there. What are the instruments, Sharon asks, that I plan around specifically? I know I'm asking you to say the same thing a different way. Thank you. So yeah, this is kind of the infinity swap concept. It's a concept. It's a derivative. It's a swap, maybe a total return swap, something like that. Very large institutional position that either, if, like in the case of Archegos, the actual party that opened them blew up, right? Lost all their funds. And so the counterparty is attempting to manage positions that were opened to hedge that particular swap that they should have been paid out on, that they weren't, by creating some sort of internalized thing that they can just kind of, maybe another swap wrapped up into a different kind of swap that then they can hedge, they can freeze for multiple years, and that they can try to accommodate by adjusting the price on top of something like that. So it's a different kind of derivative. We try to use these different ways of looking at the charts, say mapping lows to lows, 53-week theory, looking at where other institutions are placing visible swaps to try to say, okay, well, why does the price conspicuously move down around these marks? Maybe it's because institutions know that there's something else that's forcing market makers, that's encouraging market makers to act in such a way as to suppress the price around these key points. And the theory is that there's some sort of underwater, secret, buried, hidden derivative instrument that's responsible for that. That's the idea anyway. Birthday gift for Roaring Kitty, or is it your birthday? What's the bottom I see for this cycle? Fair estimate, asks Tomer. Since the surprise beat, do you think it won't be beat down as much as last year? I think it could absolutely go as low as last year. I don't see why not. In the 20s seems reasonable to me. I mean, I always hold back. I never say, nothing's impossible for these guys. But I would say, yeah, maybe something in the 20s makes sense. If Bitcoin starts to move up, maybe maybe that does something, but I don't know when Bitcoin's going to start to move up. Cash pile grew, operating business is profitable. I think they could push us back down to that floor, which should be in the mid 20s or so, around the price that hypothetically Ryan Cohen's pay package is priced at. So around 2066, I think it is. So I could see that. I could see that coming up. What is my target to close my $417 $20 covered call? I mean, if I'm seeing 20s really, really soon, if $20, if 2050 shows up really, really soon, I'll consider closing it at that price, because I think we would kind of pop back up and then come back down for like a double bottom thing. But if we slowly bleed, and we're slowly bleeding, I'm just going to see where we are kind of that week of OPEX, and then try to make an assessment there about how to reposition or something like that. Am I able to link some of the data, presumably regarding swaps? I might ask. I'll ask some folks about permission about sharing anything. I'll ask for you guys. Mr. Databugs, thanks for sharing the spoils of knowledge with you. Don't ever retire, JK. We support you if you do. But thanks, man. I mean, listen, I really appreciate the opportunity to talk to you guys. You guys always ask great questions. And so much of this insight I garner in the first place because I'm inspired to look in one particular way, to think in one particular way, because of questions you guys ask, things you guys DM me or post on comments and stuff on Twitter or on YouTube. People I met because of doing this, who then share things with me that they found, and vice versa. So, this is, for me, this is an important and integral part of the process of figuring this stuff out. So, as far as I'm concerned, it's only just to share this stuff. So I'm very happy to be able to offer insight, in such a way as in return for asking the questions that many times, even if indirectly, help me find the knowledge in the first place. So cheers, Mr. Databugs. I know I'll retire at some point. I don't know if I'll do this forever, but it's I still like talking to you guys, and I don't know, maybe when there's more than one baby in the house and attention is drawn a little bit more towards kids or something like that, or taking care of family, I'll think differently. But for now, I'm still very happy to do it. Tomer says, I've lost so much money trading options and hoping to get over the losses and start this new journey with love and answer. Don't trade single leg long options, man. That's advice number one. I mean, not advice, but I don't really even do it anymore. Like, I mean, I have it as a thing in my back pocket. Like, if we dig deeper than I think we're going to dig or something like that, I can take a portion of the position and I can leverage it. Shares and covered calls, man. It's really hard to go wrong with that, right? Especially if you believe in the company. It's way easier to manage. It's just, you can focus on other things in your life also. Like, you don't feel like you have to monitor the market all the time. Like, it's just, that's what I would say. Stick to the wheel, right? Master the wheel first. I know it doesn't seem as exciting, but like, it really, really compounds your capital so well. You preserve capital so well. GameStop is an incredible opportunity in terms of how, for lack of a better term, predictable the cycles are, right? I mean, they're difficult to predict, but you can see that there is an internal logic or multiple competing internal logics with respect to them. And so even if you have limited information, you can kind of tell something's going, right? You can see there's this engine, there's this volatility engine going, and you can make a lot of money just taking good risks, just structuring good risks, structuring good outcomes using derivatives that are there in your favor, and avoid those kind of biting losses and stuff, which single leg options do, unfortunately. Yeah. Yeah, birthday present for the kitty. Yeah, for sure. Live stream collab between me and Richard Newton. Hey, I'm always, if it's something at some point Richard is interested in doing, I'm happy to talk live on air. I don't think that's where he is right now in his journey. He's doing his own stuff. He likes just kind of being this occasional like drop in on Twitter. As far as I know, he's happy not to have a YouTube presence really anymore. So yeah, always happy for it. But that's where I think he's at right now. Yep. Like Doc says, don't buy calls or puts, just sell them against your shares or cash. Yeah. That's mostly what I do. That's mostly what I do. It's mostly what I do. The market maker, the options market maker is obligated to take your trade. You will always have somebody to buy it from you for that reason. They're very, very good returns. Yeah, it's really awesome. It's really hard for me. And like, yes, you do need a little patience when you're getting started, but like, wow, it snowballs. It really does. And it's like, you'll see, like, just do it out, right? Do the percentages out. See what it would mean for you to go for this target. Like I try to set this target of averaging over the course of a year, $1 per share per month. And just do that out. And like, you'll see, and also think about it. Like, hey, you have a job too, you're working too. You can make even some occasional contributions. Like amazing, even better, It all adds up so quickly compared to anything else you could do, really. And GameStop is an incredible opportunity to be able to run that strategy. So I keep it right. I'm honest with you guys. I tell you guys what my positions are. I tell you my entry points. I tell you this stuff. I don't get, sometimes, I'll play around a little bit. I'll get a little creative from time to time, but at this point, I don't really, I've had so much success managing, just kind of the basics with respect to, wheel strategy and stuff that, at this point, after having gotten, success up to this point, it's like, I don't really see a point in taking on more risk, for what necessary purpose. I meet my goals, right? As far as I am concerned, I'm meeting my short-term, medium-term, long-term goals by doing this. So why take on more risk if I don't need to do that in order to meet my goals? If with less risk, I'm meeting all my goals, why would I take on more risk to meet the same goals? Doesn't make any sense. So that's my orientation towards that. Mr. Unlimited, hello. Hey, Michael, I appreciate you holding these sessions. Where are we in terms of Richard Newton swaps? I had them lined up based on Richard Newton's sheet, but now not so sure. What are you seeing? So I don't track the swaps directly using the star method. Richard's older charts definitely does. I don't even know if he still does. I don't know if he still does that. I know he does keep track of them kind of internally for himself. What I would say is I am looking at a combination of like just kind of comparing 53-week theory and also taking a look at where we do have visible swap positions. Now, there were visible swap positions that were opened on the 9th of April, which I marked on my little graphic there on my model. Those were closed, so more updated data has indicated that those ones from the 9th of April are closed. So they're apparently no longer open, but it doesn't mean that there isn't some kind of hidden derivative that's still connected to those. So that's part of why that's still on the chart there, on this model chart. Right, so this one here. So we had one batch here for the 18th of March, another on the 9th of April, which is also just about, I think it's a little more than 53 weeks after the second bottom that we had last year, after the bond offering. So which I think 31st was another pile of swaps from last year around this time. So around April 9th, it kind of looks like it's there. Now, like I said, the visible swaps that were connected to that date, they are gone. But it doesn't mean that say there's some kind of infinity position that's tied underneath those. And that's why whoever opened originally those April 9th swaps back in 2024 opened them in the first place. However, we do have quite a few swaps that are targeted at the 20th of April, about 75 million in notional. So more than 7 times the notional value we had on the 18th of March. Which was only about 10 million in notional. So I would say to expect a bottom kind of in that vicinity. So I think, again, because it is OPEX, because it is a warrant tied OPEX, meaning we have GME 1 options and institutions typically do not like delivering on those. I think looking at April OPEX and expecting another very large swap, this would maybe correspond to the red star swap that was there last year. That's a good estimation for where we could expect a low this year, where then we look out, we see the next pile of swaps is the 29th of May. So we can expect between, say, the 20th of April and the 29th of May, a Rainbow Road kind of price up phenomenon. And we should be able to get a sense of whether there's a lot of volatility that's going to go into that run based on what FTDs and such will tell us once we start to get those reports. If you leave, make sure to train or find a mouthpiece so you can retire and be anonymous. It's very funny. I'll call up Kevin Gill. That's what I'll do. Kevin Gill can be my. No, man, that guy's got it straight from the fount. I'll get Dr. Schmevin Schmill to be my replacement. Yeah, that's right. It's like, why do you think we're here, Mr. Databox? You are the protege. You are. Next man up, right? Sure. My current positions are that I have $20 covered calls for April OPEX that I entered at $3. The aggregate price I entered kind of across the day, a couple of different, so a little bit on Thursday prior to earnings, a little bit on Tuesday, and then most of it on Tuesday. So around 305 is what I came to as an entry price, which isn't fantastic given some of the other prices we got there, but it's not bad. And I think it's certainly still going to be fine based on what I think we have ahead of us. Already, it's looking quite nice. Where would we see this? Where's my sketchpad? Did I put this on the sketchpad? I think I did. Yeah, okay. So there's actually a good question here, sure. Let's get my face out of here. There we go. Yeah, so right, what I said was if price is at least $23 pre-earnings, re-enter full on $20 cover calls for April OPEX. That was my plan. Guess what I did? I did what I said I was going to do. Let's change. Fill. I did it. Whoa. Oops. So I did it. So that's my positioning there. And then I'm looking now. So the next step is to look at how we're going to move now into April OPEX. And my thought is to look for around 21 and to try to target 21 or slightly below 21 and kind of start entering around there and build out a position that then I can ride, right. That's where I'll look to kind of continue to increase my position. So just round number of 21. If we get down to at least 21, we'll go in on that when I see it. And then then the next part would be to expect to move up into that May 29th date, to think about then, if we do move up, look at where the price is kind of in that last week of May, and then go ahead and start repositioning covered calls. Of course, the idea is once I start repositioning into shares, also to try to go ahead and exit cover calls around there. But that's going to be closer to OPEX. That's where I am right now. I'm not selling any cash secured puts yet, although we might be getting close to some decent pricing on those. So I might consider that if we end up low sooner, I might consider selling cash secured puts rather than immediately going into shares with something like an April OPEX target. I think that's what I would do there. But yeah, good question there. How do I think the war with Iran will affect GameStop? Man, I got no idea. This is another excuse event for tanking SPY. Oh, what do you know? It's happening at the same time of the year. Like, who could have seen this coming? It's sort of, I don't trade SPY, but it's like, is this SPY or a meme stock? Like, what's going on here? Right? Like, a little bit of down in Feb, but then like, oh, March, oh no, tariffs, tariffs, no, right? And now, a little bit of down, but not too much down, and war with Iran, oh no, right? Look at this. Look at our 53-week line here. So I wouldn't be surprised if maybe we go, slot on down there, maybe something like that. Go down to pull up just shy of the 200-week moving average there. How will that affect GameStop? Maybe there's some positions that'll be hedged that'll keep us down. Maybe this actually right now what we're seeing in part is a way to facilitate shorting GameStop by sending the overall market into this kind of bearish configuration. Yeah. Hello, Adam Eld. Yo to you, sir. Tomer says, can you demonstrate for the newbies how to sell CC or puts on Webull or any platform? I use Webull. Basically what I'll say is, I don't know how that looks on Webull, but if you have shares, I'm not saying to do this. I'm not telling you to do this. I'm not soliciting anyone to go do a trade or to copy my trades or do anything like that. Just be very clear. I'm not telling you to do this. I just saw this from Guido. Gumby impression. Oh no. Yeah. So instead of buy to open, you're going to sell to open, which means you see the bid-ask spread usually on an app. So rather than tapping ask and then you give cash in order to hold a call, instead you go over to the bid and you tap the bid. You can adjust the price as you like. You tap the bid, it's going to say sell to open. And so you're going to see like a minus symbol there. And so then you're going to write a call. You're going to give someone else a call. You're going to be short a call. And you will receive cash. You'll receive the cash that you would otherwise give somebody else in the event that you were buying them. So same thing works for cash secured puts. It's just you'll use cash in your account as collateral rather than shares. But that's typically how that looks. Yeah. There should be tutorials in the websites for doing this. In your platforms, there should be tutorials. And I know, like, if you use Thinkorswim with Schwab, like, you can call them and you can say, hello, I'd like a tutorial. Can you walk me through how to use the platform? They should tell you. Yeah. So that's what's coming up this week, guys. I think we may see, a little bit of introduced volatility from some of these FTDs still hanging around. Some of these XRT FTDs, especially going into this week, not too much, right? I'm not expecting, I'll go to 24 or 25. No. I think we're looking at maybe max kind of a dollar retrace up to about 23. That should be, we'll take a look at the beginning of the week. That should be reflected in the options data. And as far as me, right, I'm just kind of sitting now, just watching what happens into April OPEX, looking for a low. I will keep you guys posted if I do decide. Like I said, if we end up lower sooner, like if we're at 2050 or something midweek, as a surprise, that would be a surprise to me if we see that. But if we saw something like that this soon, I would consider selling cash secured puts into that, because I think we'd have a chance to go up, down, like to go up and then come back down again into April OPEX. But we'd have to see something deeply low, like nowish, in order for something like that, I think, to develop that type of situation. So that's one thing I'll keep in mind. So thank you for the reminder in that case. But yeah, guys, thank you very much for another great live stream. I'll post stuff as stuff comes to my attention during the week, obviously, on Twitter. We'll keep taking a look at this 3-month forecast here and seeing how closely it it resembles real life. But yeah, have a great week, have a great weekend, have a great Palm Sunday tomorrow, right? In line with the title of today's live stream. And yeah, we'll see you guys next week. So enjoy the end of March, beginning of April, and yeah, God bless. Take care. Thanks a lot.